everyone, this is Roger and we're starting our live session now. So the topic of today is about the access to project finance, and this session is overdue. Internally, as the member of Daxel company, we envision to start this set of conversations for a while now. But because we are busy, sometimes traveling, like today, I'm also out of the city traveling, but we decided to get started so we can have continuous conversation regardless of the personal consideration. So we really want to make this experiment more entertaining and educational, but not academic, right? So we really want it to be kind of exchange, responding to questions, and really sharing what we learned from our experience as investment facilitators, but also as entrepreneurs that can benefit other entrepreneurs or can benefit our customer or any potential project owners, including sponsors. We also want to make a disclaimer that this is not really kind of professional sessions where we will conduct professional evaluation, because there's really strict regulation about that. But it's mostly about sharing experience, about stimulating other people, about learning also from those who will show up and those who will share their questions and experiment with us. So we want this session to last for an hour. So we hope that after an hour we'll have done with the day. So why this event? Just to refocus, why this event? Like I say, this event is really overdue because we have learned a lot this past 2 years since we pivoted Daxel from purely individual projects to more of enterprise, kind of B2B projects. And we got some kind of global, not only insight, but also common denominator that we found in some of the projects that we support, and with funders or managers who work with us. Mostly we can call them clients, and also can call investors. Investor or only project owners. We learn a lot, and we still need to learn more. But we believe that if we can share with more people, we will certainly have more impact in not only our activities, but also in showing what's going on in the ecosystem. So mostly we work with SMEs. SMEs is for small and mid-sized enterprises. You can even add micro-sized enterprises like MSMEs. As many of you know, SMEs constitute like 3/4 of the economic landscape in developing and transitions economy. I know today the conversations is more about startups and all the dynamics around the startups. But the reality is, in these developing countries, the economic landscape is dominated by families, dominated by small entrepreneurs who thrive not only to develop a personal story, but also allow many people and many fellow can be citizens to get access to more resources to better their life. If we get questions in French, I will be more than happy to speak in French and explain. But essentially, I will conduct this session in English so that we get like more of our clients, more of our partners are in English-speaking countries, and we are based in the US ourselves. So we think speaking English will be more conducive as language. Otherwise, we are really open to speak French. Also, in the questions that will follow, because we will share, this live will be online, and we wish to share it also in our YouTube channel. So we will respond to any question that will come, be it in French or even in Spanish, right? We can also speak some Spanish, but mostly French and English. All right. Access to project finance. Access to project finance is access to capital, right? So we're talking about access to project finance. We can also say, how do you access capital? What have we learned through our activities at Daxel? What question or which questions usually comes up, and what are our perspective, and what have we heard from our fellow. So when we say access to capital, we mean access to, it can be investment, in terms of loan, in terms of equity, but it can also be institutional support, because sometimes, and we have really learned, like in this country where the financial system is very weak, companies have a lot of difficulties accessing traditional funding. So it's always beneficial to them to see if there is any institutional support through grants, through some developing funds. Some funds are linked to impact investments, some are linked to ESG. But if a company knows exactly what benefits they are providing and where their project or their activities fell into the global ecosystem, they will be able to raise some of the funding through this institutional support, which can also be, even if it's not only in terms of financial disbursement, but it can also be just in terms of bringing some tools that will enable the company to get access to the actual funds or attract investors willing to share their risk. That can be equity investment, equity finance. So let's talk about the fundraising. So fundraising, really, we can theoretically is about the seeking of financial support, right? Financial support for a charity, for a cause, but most often for entrepreneurs, fundraising is about finding financial support for your enterprise. So financial support is like also seducing, right? Seducing someone because you want to bring him to a state where he will support your activities. So you work with a potential investor or VC, a group of investors, to support your project. So you want them to behave in your favor, right, by supporting your project. So it's just like you are seducing the most beautiful lady in the world so that she can be your partner. So we found something that we say we wanted to share with the community, because it's sometimes very hard when we are working with our partners or customer who shows up to us, who consult us. It's difficult to explain to them the process of fundraising when we use theory or any academic tools. And by the way, let me introduce myself at this stage. I am, like I said before, I'm Roger Yomba. I am the CEO and co-founder of Daxel. Daxel is a platform that brings together a project mostly from developing countries, and we work with our customer for their readiness so that they can access global funding. I have an MBA in finance and business analytics from St. Joseph University, Philadelphia. And previously I worked in Africa with the African Union, with NEPAD, with other private sector company, mostly in projects like PPP, meaning public-private partnership, but also as investment consultant with facilitation company. Was very active as a young person, and then that gave a kind of broad world view since I was a young leader. So working in project finance or working in the fundraising, it's been very rewarding in terms of dealing with situations that we almost faced when we were younger, dealing with situations that we face as managers, and dealing with situations that we face as consultants. So our job involves consulting, involves supporting project owners or sponsors. We really work extensively with them. I can also say intensely with them to make sure that before they go at the table of discussion with any investor, they are ready in all aspects of the project management and fundraising. So I want to share a video that we have discussed internally, and that video we took it from an Instagram post, and because we always say to our customer, listen, when you are doing fundraising, when you are raising funds, it's about preparedness. It's about how do you execute the plan, and also thinking about how you will deliver. right? So that you won't deceive and you continue benefit the support of your investors. So I'm going to share this and kind of explain while I'm sharing it. Yeah. And so let's do here. Okay, while I'm organizing it, I can continue. So the fundraising activities, we really believe, like you have to, like when you are preparing your materials to send it to any given investor. Usually, before people were sending all their business plan, sending all their materials at once to a potential investor. Today, you go step by step. Today, you don't need to send everything unless you are required to send it. Like if an investor shows an interest and say, okay, send me this document, then you will send more document to the investors. So you just start with a teaser, right? So you have to make sure that you have a very compelling teaser that will convince an investor who will like to learn more about your project. So you don't send all the business plan, all the financial statement, all the admin documentations, etc. You just send the teaser first. And in addition to the teaser, what you also send, and you should be ready with the last 3 years of your financial statement. You need to be ready, and it would be an advantage for you to have those financial statements audited. So that will show that they are clear, they are credible, and the investor will react appropriately based on the information gathered and information shared. So the last 3 years of your financial statement. Remember, I said the first thing is what? Is to share a teaser. A teaser usually, depending on how you craft it, or you can share, it can be two pages. It can also be 4 pages. But if they're well done, well structured, and very appealing to read, you can have a teaser of 4 pages. Nobody will say why you have 4 pages. So you need to have a very interesting, a very suggestive teaser, and then share the 3 years of your financial statement. In addition to those, you should have ready your business plan. So the investor will ask you a business plan. But usually, they ask you a business plan where they are interested. So nobody will read your 15 to 20 pages of business plan unless they are convinced that the teaser gave real insight on the fit, because an investor invests based on their thesis, based on some of the criteria, based most of the time also on the portfolio that they are already dealing with. We will also talk about targeting investors. But right now, let us say, so the most important document that you need to have when you start fundraising is a teaser, clear teaser. Make sure that you have your last 3 years of financial statement. Get ready your business plan which is an extension of your teaser. And also an extension even of your financial statement, because business plan will explain how you're going to use the money, how you've been performing before, what is your traction, what is your sector or area of activities. When you have those three, you're ready to go. Now, let's talk a little bit about um, how do you target investors? I know by having been in the developing countries myself, I know usually when people think about investment, they think about the banker. The banker. So say, oh, I will go to this bank, I will present my business plan, and then they will fund my project. Okay, yeah. So that works before. That worked before, but now the banker eventually can be very useful to you during the operations, during the operational phase of your company. The banker is not the first person to go when you are raising funds, unless you have particular relationship with this banker, and then they show some interest in considering somehow your project. I think you just waste your time going to bankers, because the structure of banking is not the same like structure that investor use. So investment bank, that's different. So if you, like now I'm talking about commercial banks are not where you should go when you start fundraising for a project. But if you know investment banks, yes, you can go to investment banks. Other investment tools or investment actors that you can consider. Eventually, you have the VCs. If you are a company that is still relatively young, without having all the strong financials of an existing SME or an existing company, yes, you can still go to VC. You can go to private equity when you reach a certain level of activities. So don't go to private equity when you are a new company, you don't have enough resources, you don't have strong financial statement, you waste your time. Eventually, you can go to what is called family offices. Family offices are at least called family that put money together, and they have managers using that money to generate more resources for their families. So, okay, it doesn't mean that only families, but a group of people, right? They put their resources together, and then they have managers who will manage these funds, and they will make placement on their behalf. So, family offices can also be a good place to go when you are raising funds. Your network of network. People will say, yeah, in developing countries or in transitional country transition, raising fund through family members is not easy, because the level of income, level of resources is very low. But at least if you know in your network people who have resources, eventually they can also be those that you can contact to raise your funds. So family offices, yes, you can go there. VC, depending on the level of your activities, you can go there. Private equity funds, yes, if you have strengths and you can show them that they can take a risk with you, yes, you can go to private equity for your fundraising too. But while you are going to these different actors, these different institutions for your fundraising, you should also know what are their requirements. Like I said, what are their sweet spot? What is the even in terms of sweet spot, how much they be investing in companies? What is the maximum they can invest in? What is the minimum they can invest in your company? So you also need to target appropriately, not to waste your time, like sending package that will never get any feedback, right? So, and I know that's where investment facilitation company or any different type of consultant can help you target appropriate investor for your company. So, fundraising is also about preparedness. Like I said before even thinking about raising funds, you should make sure that your company is ready, that you have the minimum of required kind of administrative tools, kind of legal documents, make sure that you really file your taxes. You have nothing against you about the taxes. You have no litigation that can hamper your credibility. You have a well-structured team with all the resume available. You have investigated everyone in your team. You know that there's no cops anywhere, because investor will go through these materials very, very intensely. And I can give you an example that we went through. So we happen to have some customer in, I will not name the country here, but this guy, they have a very interesting company, but they were trying to hide some information to us while asking us to help them raise funds. So they were trying to hide who were their investor, who was a part of their cap table. So you cannot hide information about who is part of your cap table when you are trying to convince investor that you are a person they can invest in. So this is totally unacceptable. So that means before you even go to raise funds, you have to make sure that every single information that you have in your folders is totally checked, is credible, and will not create any kind of doubt that will hurt your fundraising efforts. Again, those aspects you can deal with them when you are working with professionals, right? Like of the investment facilitation company, ourselves, or any other type of consultant or advisory group. Okay, I spoke about who you can go to when you're raising funds. I didn't mention advisory group. So advisory group are also where you can go to raise funds. You should know that they will have their cost. So when you go to any specialist, any professional, can be a broker dealer, can be an advisory group, or even the VC, you should be aware that those actors or these professionals, they have certain level of expenses that you should be prepared to pay for. This is also an opportunity to address the fact that we hear many people, mostly in Africa, saying that, yeah, we spend some money, we hire a consultant, but they didn't deliver. Okay, so that is also another point. Like, when you are hiring a professional, you should make sure that they are really a professional, and they should tell you exactly what they will do with you. You should have a contract saying that this professional is helping me write my business plan. For example, this professional is helping me for my strategy. Don't hire someone for a strategy and expect that the person will help you for the fundraising. But this is totally different. So a good consultant can know everything about financial statement, about financial projections, about assessment, like the ecosystem, all this, the planning, etc. But he may not be a good fit for your fundraising. I mean, when you go to investors, it may not even be a good connector. So don't hire someone for a specific job and then expect that he will help you access the funding here, if you're talking about fundraising, or help you connect with investor where he's not a professional in this sector. So make sure that when you're hiring somebody, you hire a professional, you hire someone who is well known, who is aware of how this sector functions, who can bring you at the table of negotiation. Because when you're raising money, you want to be at the table with investor, negotiating how the transaction will unfold. You don't want to be working with someone who will just show you, yeah, I know this, go there, but he should know what are the process and the requirements. Okay, so that was important to address. So another point, sometimes people come to us and say, yeah, but Roger, that's it, you guys, you are raising money, but we also got some proposal and we sent this, let's say, fees to those guys and they never deliver. I also want to warn you about a lot of scammers. There are many scammers in the industry. You can receive a very fancy letter, a very fancy emails of someone saying I am a prince in Saudi Arabia, or I am managing the money of the Sultan of Oman, or etc. But I want you to open a company in Oman so that I can transfer the money to your account. Those are usually the tactics used by scammers. Be assured that ourselves, because we do some background check, we do the background check not only for our client, but we do them also for the investors. So whenever we receive any proposal from any sometimes like you just receive like an email, like unsolicited email from potential investor, we have to do our due diligence. So we check these guys. We make sure that what they are saying is totally true. So we as Daxel, we work with the U.S. agencies, like we work with U.S. Commercial Service, which is kind of a component of the U.S. embassies. So wherever you have U.S. embassies, we are entitled and we contract when necessary with them to help conduct the background check for the companies that we are involved in, that company that we have. So this is an important fact. So before you engage with any potential investor, you need to do your own due diligence on them. Make sure that they are legit. Make sure that these are not scammers. Scammers are not only from Nigeria. Usually people think that some are from Nigeria or India or in any other country in Africa, etc. Scammers can also be based in Europe, can also be based in these MENA regions. So you need to do your homework. You need to do your own background check on these potential scammers. So don't give your money to scammers and then go to a professional. That means that you already spend your money with some kind of consultant or some kind of investor, but they ask you to give them money so that they can invest in your company. Someone who is supposed to invest in your company cannot ask you to give him money first. So before you go there, we are not giving professional advice here, because those are things that you should work with your broker dealer. Before you go to like signing any contract, sending any money, make sure that your lawyers are involved. Make sure that you have a legit broker dealer who will support the deal. If not, don't send your money anywhere. Don't send your money to any potential investors telling you that we need a 10% of your investment so that we can transfer the money to your account. That is not true. So if you do that, you just lose your money, and we as professionals helping you, we are not responsible of you losing money. So when a professional come to you and say, these are my fees, or this is my compensation scheme, you should work with him for that compensation. Okay. What else can we address here? Still want to share this video, and let me see here if it's ready. But those are important points that we wanted to share to start this session, and we will be conducting other sessions like this. We want them to be like every Monday around 3, so that during the week, if there are some questions that comes in, we can address those questions, and then appropriately come into some kind of way forward with our people of our community. I think we have, oh yeah, cameras. Okay. All right. So um, let me see here. So you address what you need to have before you start the fundraising, preparedness. We may start talking about readiness. I can talk about readiness, what we call readiness. So, like we said, before you go to any investor, you have to make sure that you are really ready. You have everything, because investor usually they give you one shot, meaning they give you one chance to prove that you are the right person for the right company. So if you mess up at the very first meeting, you may not have a second meeting, and you may have a very hard time convincing other investors, because the investor community is a network. Usually people know each other, so they eventually can share some experience. So if you mess up with one investor, you may end up being kind of labeled in the industry. So to talk a little bit about readiness. Readiness, like we said, you need to have all your paperwork ready. You need to have a data room. Today, you don't share piles of files online, like sharing folders like you used to do before. Today, you just need to have a very powerful data room, easy to access, well organized. In the next session, some of the section that will come, we will show some kind of templates that I use most of the time. They can vary, but usually the name of the files can vary, but the content is almost the same. So we want to make sure that your legal papers are organized, your accounting papers are organized, your legal admin paper are organized, and even operational sketches or any other organogram that you have should be clearly organized and ready to explain to potential investors. Don't try to hide any information. Readiness is also about having clear and trustworthy information. I gave you an example of a client in one country. They had like $50 million project. They were previously funded by a group of investors, and that they couldn't go to the end of their contract, and then they were looking for another investment, but they didn't want to release the name of the first investor. You understand that this kind of looks like fishy. So no investor will go in any business of a company hiding this kind of information. So if you want to go outside there, you want to go in the ecosystem to raise money, you need to make sure that you are ready to share all your information. Make sure that you have the appropriate team. If you have some gap in your team, you need to provide some plan on how you will fill out those gaps. Meaning, you may have a recruitment plan that you share with the investors. You need to have all your accounting system ready with all the justification. So nothing should be questionable. Readiness is also about having all the legal contracts of your current customer, current employee, current supplier, and even if you have some kind of licensing with the state, federal government, etc., or regional body, you should have those ready for the due diligence. There are two aspects. If you don't have the paper ready for due diligence, then the investor has to ask you to provide. That will delay the process. So if you needed 3 months to get access to funding, if you have this back and forth with investor, you can extend the period to 6 or more months. So the idea here is to have a short period of time for due diligence, so you need to have everything ready for that. The other aspect is if you don't have the material, if you don't have the document needed, you don't have the justification or the proof, that will show a lack of fairness. That will show a lack of seriousness. So investor will not go with you. So this is easy to understand. This is easy to know as well. So they ask you some questions, they ask you some paper, you can provide them, we won't hear from them anymore. So it is important for any investor to get the appropriate document from a potential investee. Again, those are things that investment facilitator can help you with. So make sure that they can go through all the process with you. They can even act as an investor to challenge you, so that when you get to the point where you are now negotiating with the investor, you are ready to go, and you make the process more relaxed, more enjoyable, right, and more rewarding, because by the end of the day, what you want for your company is to get access to the funds, get access to resources. So if you can convince the investor or investors, then you end up having the resources. So this is an important point we want to share, because some of our clients, some of our customers, some of our potential clients, they don't always understand that. Okay, now let us talk a little bit about, we said about you need to have the 3 years of financial statement ready. Let us talk about the decision of what do you want to raise as investment. Again, this is not a professional advice, but this is just some kind of remarks on what we've seen during the past 2 years working with our clients and investors. A company can come up with the idea to raise $10 million, which is good. They have a market, and usually they have a good narrative about the market. They have proof of, okay, we already have some clients, but we need to expand our market to maybe this number of clients, these regions, etc. in the country. But the reality is, if you haven't managed $1 million, and you can prove that you've managed $1 million for a company, nobody will trust you with an ask of $10 million, even $5 million. Before an investor provide any resource to a company, they want to make sure that you are at that level of management. So your company should have proof that they've managed $10 million or even $1-2 million, and they were able, let's say they got an investment of $2 million earlier, and they were able in a short period of time to deploy that investment, and also they were able to prove a well management, well disposal of that resources. So if you don't have a financial statement showing that you've already managed substantial amount of money, don't waste your time asking for 10 times what you don't have in your financial statement. Okay, don't waste your time looking for $10 million when you never manage $1 million with proof. So, something else that we can also talk about is the background check. Okay, let's talk about a little bit about the background check. So companies based in Africa or any other part of the world, like Asia, even in the Latin America, sometimes they can think that, oh, right, people will not investigate this aspect of a company. I think we are in the safe zone here, but that's a false statement. It's also a false consideration, because when an investor is interested in a company, he gives himself the means and the tools to check every single information that you provide them. In our case, I told you that Daxel, in our case, when we are working with a company, we make sure that this company is investigated by the U.S. Commercial Service, because we work with the U.S. Commercial Service as partners. So they have teams of lawyers, they have business savvy people who, in the country where your company is located, they can conduct this assessment appropriately, and they know everyone almost in the country. So if you pretend of having a client that is not your client, they will know, because they will call that person, they will check, they will discuss with that company. Conversely, if it's about people working in your company, they will have the means, they have the tools to check if everyone that you've listed as your staff is really working with your company. Okay. So that's a background check. Background check is about all your financial life, all your legal life, all your admin life as a company, right? But also as managers, officers, and even board members. So this investor will go through this information and check every single one of them to make sure that they are not risking their investment. So, and a company seeking for investment should be prepared to be investigated and prove every single line of their information. Okay. We spoke about the amount that you raise. We don't want to give some numbers here, because but I can tell you, if you never raise, you never manage $10 million, don't ask for $30 million. Even if you say, yeah, we need 20 million as equity, 10 million as a loan, that will not work, because there are some ratios that the bankers and investors will always look onto to decide if they can give their money to this particular company. Okay, so now there another point that people usually refer to. Let's say that one is, okay, we need like equity versus loan, etc. Right? Okay, we need an equity of 30%. We need a loan of 70%. The way you have to determine that should also be very, very thorough way. Because just as a general comment, when you're talking about equity, you're talking about who else want to risk their money with you, who want to take the risk with you in your business. And not only we spoke about the background check, about the legal aspect, admin aspect, even financial aspect that they look onto, but they want to make sure that the asset that you have are really what you need to achieve your goals, right? So if you don't have a strong company and you are looking for a technical partner, or let's say strategy partner, who will help you access a certain level of funding, they may not accept, they may not find it attractive. So how do you resolve that thing? Again, when we have a session or we have a client, we go deeper on those kind of situations. But the simple way of saying things is, it's better to start asking for small amount of money, dealing with those, showing the proof that you were able to raise 1 million, and then from that 1 million you get this level of activities, and from that activities now you are looking for more. That will make sense for everyone. That will make sense for everyone. So Start with a small ask. Even if you think that your company needs 10 millions of dollars, but if you can only manage $2 million or in less, you need to craft your business plan and your whole strategy of fundraising around that minimum amount. So don't waste your time trying to target higher amount of money without having proof that you have, like we said previously, managed small amount of money, you have executed some level of contract successfully. So the decision of how many, or decision about how much to I raise is also about your current capacity. So once you raise $2 million, you successfully met all the system of control, you show all your results as expected, or with little gap, you can then pretend to a higher amount of money. So that's also one factor that any project sponsors need to understand. I promise a video, maybe we share that video next Monday. It's a short video, but it's all about how do you execute a fundraising strategy. We'll share that video next week. So what else can we, in terms of general notions, share today? We share about readiness, we share about what amount of money you should target. We can talk about the decision on like choosing who do you target as your investor, in what region, in what country, etc. You should know that fundraising is very painful. You know that already. Fundraising is not about, oh, I'm going to decide of raising 1 million next year, and let me start in June, and then I'll get the money next year. Fundraising starts 3 years before you even decide to go into the market to find this money or find this capital. 3 years back, you should start preparing it. And if possible, have people in the company, like a team, tasked with fundraising, working with the officials, with the top management, but being really specialized or focusing in fundraising. Because fundraising is painful, is resource draining, is really capital intensive sometimes. Okay. Now we spoke a little bit about the type of capital that you can check, or type of resources or support, financial support that you can target. So if you have a very significant social impact that you are really benefiting, you should be aware of what's called the UN SDGs, meaning UN Sustainability Development Goals. You should check what goals your company helped to achieve. Every goal has kind of different set of activities that your company may have already handled or may be conducting. So you should know that. And if you don't know that, you can work with a professional to determine. So you have a lot of software outside, you have some agents specialized, and you have some private companies specialized on those type of investment. We also, as Daxel, we can help in finding the appropriate tools and appropriate resources to show that your company can comply with the requirement on the SDGs. So that SDGs can help you get access more easily. Again, easily here is in bracket, because there's nothing easy in fundraising. But at least you can channel your efforts toward the appropriate tools, appropriate resources available. SDGs, meaning
sustainable investing, impact investing, usually goes with ESG as well. So you should know how ESG today, when you have a bigger project, a considerable amount of money that you're raising, you should be prepared to address the ESG. We have in our portfolio, or let's say in our pipeline, we have an interesting company that is facing the ESG challenge right now. So they almost met every other criteria, but there's an aspect of the ESG that we did not pay attention to. They did not pay attention to. And we gave them some advice on that, but it was well perceived. So they are facing that challenge. So if you really want to raise money, a very substantial amount of money, you should be ready to review every single requirement that the ESG will go through when considering your project. Work with professionals, have some contingency plan to address those. Don't neglect them. If you neglect them or you try to ignore them, they will hurt you. Hurting you meaning they can delay access to capital, they can require additional intensive work to convince a potential investor about investing in your company. So you should be aware of all the requirements. If you have a consultant working with you on that, you should have everything ready to show to the potential investor, that these are the requirements, these are the proof that we meet those requirements. What else can we address here? Or we can address we have addressed the amount that you can raise. We have addressed some consideration. Yeah, we talk about who do you target as your investor, potential investor. There's some preliminary work that you have to do. There's some research that you have to conduct. You just don't send document, like we said, to the bankers before. It can also be to random investor, because every investor has his sweet spot. We talk about the amount that they can invest, but they also have some industry specifics that they consider. Like an investor in, even if you know a company that just raised money for renewable energy project, and then you have a project that kind of is similar, but you're talking about climate or carbon sequestration, it might not be the same. It might not be for the same investor, because, like I said, if the investor doesn't invest a substantial amount of money and you bring a higher project, they may not consider it. So you may send it there, they'll be expecting some feedback, they may not even respond to you. So you should know that this investor, they can invest in this type of, are they ready, this type of project, and then if they are ready to go, kind of syndicate their efforts or work with other investors. So you should know those. You should know what is their portfolio, meaning what company are they already investing in. That means they work with those companies. I will let me stress an example that just happened. The news happened last week in Ghana. We have this company called Dash. Great brand. And the last 5 years, they were able to raise like $86 million. But they are shutting down. They are shutting down because of some misappropriation, some managerial issues, and certainly some we call it some systemic reason, but the risks are there. So maybe some of the risk factors were not well addressed. So beware that this investor, if they already know a company, and this type of news will influence a lot of investors. So if you're investing in the area that fintech, that's what I was about, fintech, you should be aware that investors will have some kind of concern about investment in this area, in this country, based on that experience. So you should know who to target as investor, know their story. If you can have some contact there in the company, that's fine. Again, those are the area where an investment facilitation company or an investment facilitator can help. Sometime also advisory services can help you on identifying the proper investor for your business. So today we will end this session with those remarks. It was the introductory session. We will continue this experience every week, mostly on the Monday. Like I said, today I am out of town, but I decided that we should start because we've been planning to start these sessions, to start the dialogue. Today we didn't have questions because we understand it was the inaugural sessions. So we will get some questions certainly next week. We will really favor conversations with participants so that we can share our experience. Every single item that we address here, every single line that we address here, trust me, you have tons of elements on that. How to target investor, what is the appropriate amount for your business, the sectors that are funded now. Hey, Andrew. Thank you. Thank you, Andrew, for the information session. Yeah, we really wanted to make it an information session, and we are open to start conversing with the community, with our customer, now potential or existing, or even some investor who have questions for the type of customer that we serve and their challenges. So we'll talk next week about the biggest challenge that many companies in the European countries faced. And I can also tell you that it's a financial one. So thank you for listening, and let's mark in our calendar that next week on Monday we will have another sessions, or we'll try to make them at 3 p.m. Eastern time, meaning New York time, and for an hour. Thank you, and see you next time.